Ladies and gentlemen, good day and welcome to Gopal Snacks Limited Q4 and FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us today senior management team of Gopal Snacks Limited, Mr. Raj Hadwani, Chief Executive Officer, and Mr. Mukesh Kumar Shah, Chief Financial Officer, who will represent the company on the call today. The management will be sharing the key operating and financial highlights for the quarter ended and full year 31st March 2024, followed by a question and answer session. Please note that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. Gopal Snacks Limited will not be in any way responsible for any action taken based on such statements and undertakes no obligation to publicly update these forward-looking statements. Documents relating to company's financial performance are available on the website of Stock Exchange and the company's investor session. Trust you have been able to go through the same. I now hand the conference over to Mr. Raj Hadwani. Thank you, and over to you, sir.
Good afternoon, and thank you for joining us for the earnings call. We hope you all got a chance to go through our investor presentation uploaded on the stock exchange. We will share our key operating and financial highlights for the quarter and full year ended March 31st, 2024. We are happy to report that the quarter and year gone by, Gopal Snacks has continued its leadership position while ensuring that the building blocks are in place to grow in the focus areas that we have set for ourselves. Our leadership position as India's largest gathia manufacturer continues to remain strong and growing in line with the market. Additionally, we are making strong strides in the wafer segment, both on a volume as well as revenue. Our focus markets such as Rajasthan, Maharashtra, Madhya Pradesh and Uttar Pradesh have shown strong revenue growth of almost 37% year on year in the last quarter. We have also been focusing on improving our product mix, and our efforts of increasing the rupees 10 pack are also yielding good result with almost 42% YOY growth in the number of packets sold in Q4 FY24. In terms of product launches, our team continue to innovate, and we had 3 launches in past 3 months, underscoring our commitment to deepen our product offerings. As you are aware, one of the key drivers of growth in our business is our distribution strength. In line with that, we are consistently expanding our distribution network to 667 distributors now, and increased our retail touch point to over 5.50 lakh as on FY24. Looking forward, we will continue to enhance presence in core market of Gujarat by focusing on capturing market share in wafers category, accelerate our penetration in the focus market such as Maharashtra, Rajasthan, MP and UP, and push our expansion into newer markets such as Jharkhand, Chhattisgarh, Telangana and Karnataka. We are excited about the opportunities that lies ahead, are confident in our ability to deliver value to our customers, partners and shareholders. I will now request Mr. Mukesh to provide his thoughts on quarter gone by. Thank you.
Yeah, thanks Rajbhai. Good afternoon everyone. So let me begin with sharing key financials and operational highlights for the quarter ended March 31st, 2024. So as we reflect on the performance of past quarter, it was a great pleasure that I share our achievements and outline our strategic visions for the future. Our quarterly results have indeed surpassed expectations, with operational revenue making an impressive 8% growth compared to the same period of previous year. In terms of profitability, gross margin remained stable at almost 28% at a absolute amount of 101 crores. EBITDA margin stood at 11% in Q4 versus 13% last year. The reason for drop in EBITDA is mainly contributed by inflationary impact, which has come from our employee cost, where we have added new headcounts and the annual increment, which has come in year FY24, and there has been an increase in marketing costs in FY24 and Q4 24 versus previous year. During Q4 of FY24, we have seen almost a reduction of 16% in our palm oil prices compared to last year Q4 of FY23, and 20% increase in chana prices versus Q4 of FY23. So the benefit of net reduction in the raw material prices, which approximately amounts to 5 crore, we have passed this benefit to customers in terms of grammage increase on couple of our 5 rupees SKU from 20 grammage to 25 grammage, and also increase the retailer margin from 50 paisa to 75 paisa in Q2 of this financial year. Now I'll begin with highlighting our 12-month performance, which is FY24, and compare it with previous year FY23. Our revenue remained flattish at 1,400 crores, and gross margin remained stable at 28.5%, and EBITDA margin was at 12% compared to 14% of the previous year, while gross profit margin remained stable at 28%, but EBITDA dropped by 2%. The reason being, which I explained in our Q4 analysis. Similarly, for the year also, there has been increase in overhead cost while revenue remained flat. The increase has happened in salary cost and marketing cost, which was close to 32 crores, and that is the reason why the EBITDA has come down. The overall, if I have to just to give a key highlights of our Q4 performance, I would say within ethnic segment, which is our key segment, our revenue from Gatia has grown. Revenue from Gatia product has increased by 5% year on year in Q4, which was Q4 versus the previous year. In Western snacks, our wafer, which is our profit selling product, has increased by 40% year on year versus the previous years. Coming to state-wise performance, our focus market, which includes Maharashtra, MP, Rajasthan, UP, has shown a tremendous growth, almost 37% in increase in revenue in Q4 of this year. Our product mix, which is 10 rupees SKU and 5 rupees SKU, while 5 rupees SKU continues to contribute to a maximum portion of our revenue, but we have seen a growth in 10 rupees SKU as well. It grew by 36% year on year. So these are the key highlights which has come in Q4 compared to previous year. Coming to the balance sheet analysis, we have healthy and the best of the balance sheet in the industry. Our ROC stands at 31%, our ROE stands at 26%, and asset turnover ratio is 6.6 times, which is at the current capacity utilization of 35%. We have a potential to leverage this capacity. Our revenue can climb to 2 times without any major capex. So that's the healthy balance sheet we are talking about. From a borrowing perspective, we are judiciously utilizing our cash. We have lowered our debt during the year from 107 crores in March 23 to 67 crore in March 24. So maximum of our cash which we have generated from operation was utilized towards repayment of borrowing and some part of capex which we have incurred during the year. So with this, I would like to conclude my remarks and reiterate that we are poised to grow to our leadership position in the Indian savory market. With the host of backward integration facility we have and well accepted product range and strong distribution network. We look forward to an exciting year ahead, and we are open to question and answer. Thank you, everyone.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Nishant Bagecha from InCred Equities. Please go ahead.
Yeah, thank you for the opportunity. Sir, I have a few questions. So firstly, on your margins, so again, our margins have declined this quarter and on a YY basis and also in FY24 by almost more than 200 basis points, so due to various factors which you have highlighted. So again, sir, what is your outlook in terms of margin in the current financial year, that is FY25?
So, thanks. As you know, what we anticipate is the inflation is going to be stable, less than 3 to 5% is what is our estimate. And going forward, we also see a good monsoon in the year ahead, which will help us in kind of maintaining a stability at a raw material price. And we don't see much of raw material prices going up. Hence, our estimate is that gross profit margin will be maintaining at a range of 27 to 28% going forward. From an EBITDA perspective, our target to maintain EBITDA is in the range of 12 to 13%.
Okay, so basically, for FY24, your gross margin stood at around 28.5%, and you are expecting 27 to 28% on a sustainable basis, and your EBITDA margin would be around 12 to 13%.
Yes, yes.
Right. Okay. So, I have one more question. So, as you said, your marketing expenses have increased during the quarter and in FY24 as well. So, can you just quantify the number of advertisement costs during the quarter and in FY24?
Yeah. As we move forward, we plan to increase our marketing expenditure. We have planned to increase approximately 2% of revenue, which is currently less than 1%. The increase in marketing spend will be offset by the operating leverage from fixed overheads, which we have already incurred in our Nagpur and Modasa plant. We will also be benefited by saving from various initiatives such as our renewable energy installation like solar, windmill and boilers, and host of backward integration facilities which we have. So we will get a good amount of savings coming from these facilities, which will offset the increase in our marketing and branding cost.
Okay, so what was your advertisement cost during the quarter? So it was 1% of the revenue?
So during the quarter, it was close to 4 crores. On an overall yearly basis, it was less than 10 crores in FY24.
Okay, thank you. And just wanted your sense on the competitive intensity you are facing in your core market, as we heard that some of the regional players are becoming very aggressive in terms of adding capacity or you can say. So just, are you facing any heat there in terms of competition in your core market, like Gujarat?
So we have a dominance of 30 years in Gujarat market, and currently we are penetrated 75% only. And our focus is to do a deep penetration, both from a product perspective, where we have at least 25% of retail outlet where we are not present. So we will increase the retail outlet. We will do a deep penetration of our product at the existing retail outlets. Also, couple of places in South Gujarat, we have vacant places where we are planning to appoint new dealers. Hence, the target is to focus on deeper penetration in the core market, while there continue to be a competition coming from local players, etc. But we have strong dominance and our brand is very strong in Gujarat. And we have consistently grown year on year in Gujarat market. And we don't see any challenges coming from competition in this market.
Okay. And so just the last one, the bookkeeping question. So, sir, what constitutes the other operating income, again, the line item this quarter? So, definitely in the RHP, it was given that the export benefit and the state incentives, or you can say benefit, which you receive. While again, our export hasn't grown much. So, is it like we are getting some additional benefit from the new states, or is it some seasonal stuff? So, if you see your other operating income, which stood to around 7 crores during the quarter.
So we have accounted for subsidy, which is in the nature of PSI scheme. The benefit is available in our Nagpur facility, which is subject to generation of employment as prescribed by the scheme. And we have got this benefit in the year, which we have accounted in FY24. Similar benefit, and even for the Modasa facility, the subsidy benefit will start coming in FY25. This will be in the range of 10 to 12 crores year on year going forward.
Okay, 10 to 12%. Thank you. Thank you so much for this.
Thank you. Thanks.
Thank you. Participants, to ask a question, you may press star and 1. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1. Next question is from the line of Pallavi Deshpande from Samiksha Capital. Please go ahead.
Yes, sir. Thank you for taking my question. So I just wanted to understand, so marketing spend as a percentage of sales, what do you target that to be for the next 2 to 3 years?
So I explained in my earlier question that our marketing spend, which was less than 1% of revenue in FY24, we plan to increase the marketing spend, which will be close to 2% of our revenue. However, the increased spend will not be impacted in margin because we have already spent overhead amount in our Modasa and Nagpur facility, which is less than 30-40% utilized currently. So we'll leverage on the operating expenditure coming from Modasa and Nagpur facility. And there are a couple of other initiatives where we have invested in capex like solar, windmill, etc., where we are going to get power and fuel saving coming in this year. So the EBITDA margin will be in the range of 12 to 13%, and the marketing spend will be close to 2% of our revenue.
And so second question would be, what would be the volume and the value growth separately for the traditional and the chips wafer segment separately?
So our wafer segment is something where we are. So I just let me put a perspective to our wafer segment. As per the industry report, this wafer market is close to more than 15,000 crore. Estimated by industry report in FY23, and our market share is very negligible in wafer segment. We have state-of-art facility at Modasa and the largest cold storage facility in India, which gives us an edge in terms of quality, as well as our cost of production is lower compared to any other player in this industry. And this wafer product is very profitable for us compared to other Gatia and Namkeen products. So we plan to grow in big way this wafer in FY25 and going ahead. So that is on the wafer thing. Gatia and Namkeen, we have grown in Q4. Gatia has grown by 11% compared to Q4 of previous year from a packet perspective, and will continue to grow in double digit in ethnic and much higher for a wafer category.
Right. And so this last question, so in terms of the margin for the dealer, from 50 paise you increase to 75 paise, does that continue to be like that, or you reduce that?
Just Raj, I will correct that margin was regarding retailer, not distributor.
Right,
we get 7.5% distributor margin, where the retailer margin we have to keep with our key national players. So as of now, it will be same, the 75 paise.
Right. So this is higher than the competition, right? I think it's 50 paise for them. So.
Same.
Is that right?
No, it is similar in Gujarat, and for other places also it varies, but it more or less it is similar. 75 paise for 5 rupees SKU is what is there in the industry.
Right, sir. And so lastly, what would be the capex cost for us per ton of capacity, or for 10,000 tons, any number on a greenfield basis, or both greenfield and brownfield? For a Gatia manufacturing and wafer capex cost.
So capex cost, it is not calculated basis per ton, etc. It is so overall, if I have to give my investment in plant and machinery, etc., we have 200 crore of capex spent in all our three facility put together, where we have capacity of 4 lakh plus metric ton in a year. And this investment is made in couple of years, in last 10 years or so. And this capacity utilization currently, if you see, it is 35 to 36%. And we don't see in future the capex coming in till the time the capacity utilization reaches to 75 to 80%.
Right. Thank you, sir.
Thank you. Next question is from the line of Bhavesh from Mosaic. Please go ahead.
Good afternoon, sir. So my question is on the growth outlook for the coming year. Do you have any broad guidance that you can share with us, that what kind of growth you are internally targeting for FY25?
So we are targeting growth in double digit, both in our rural market and urban market. In core market, as I said, we are 75% penetrated in terms of retail outlet, and there are a couple of places where we will appoint dealers. Our strategy in core market is to make our product available at retail outlet and increase the retail outlet heads also. So there we are expecting double-digit growth both in volume and value. Focus state is something where we are penetrated to the extent of 15% only. We have facility at Nagpur which is utilized to the extent of less than 20%. The entire place is available for us to increase our distribution. In last 100 days, we have added 80 dealers in our focus market, and we will continue to expand by increasing our distributorship network in focus market, and we plan to grow close to 20% plus in focus market in terms of volume and value.
Okay. And how big is the focus market as a proportion of total sales?
So focus market, so our market share will be less than 1% only. It is very, because if you see MP, Maharashtra, Rajasthan, UP, which is overall, if you put together, the market share will be close to 40% of the India market share, and our share is less than 2% there. So we have used opportunity in terms of expanding our network, and we have already facility available in Maharashtra, which will cater to the requirement of all these four states, because it is economically viable for us to do distribution of goods in all these four states at a lower cost.
Okay. And sir, somewhere in your previous comments you mentioned that you expect commodity inflation or raw material inflation in the range of 3 to 5% for the current year. So do you plan to take price hike for this, or how do you plan to mitigate this COGS inflation?
So I said that the outlook what is coming out is that the future inflation is going to be in the range of 3 to 5%. And we don't see commodity prices going up. In case there is a significant increase in the price of raw material, and if it is hitting us in terms of gross profit margin, etc., we'll definitely look at grammage change and will align to the industry practices also.
Okay. And so, as your share of wafers in the overall mix, it will increase over the next 3-4 years. Your revenue will also increase at a higher pace, or your margins will increase at a higher pace. Can you just clarify on that?
So both revenue and margin will increase. We have a delta of 4% of margin, higher margin for our wafer product compared to other namkeen and gatia and other products. So with the increase in revenue, as we capture more market, our revenue from wafers will increase, and gross margin, contribution of gross margin coming from wafers at a higher profit margin will also increase the gross margin percentage in total also.
Okay. And so you also mentioned that your current capacity utilization is at approximately 36%. So assuming you grow say, high single-digit volume growth or even say double-digit volume growth, you'll take some more time to, arrive around 75-80% before you start your new CapEx cycle. So do you have any thoughts? How do you see the fresh CapEx cycle? When will it come? After 3 years, after 4 years? If you can share any thoughts.
Fresh business cycle. So while there will be some small CapEx, putting some packing unit or some fryer, but it will be very negligible. Once after 2 years, when we'll reach to a capacity of 80-85%, while our ordering will start on CapEx in the second year going forward, but our peak is 75-80%, and then you'll see CapEx investment in the business.
Okay. And just from a final accounts perspective, what's your net debt in the balance sheet now after the IPO and all? I think you also paid down.
Net debt is basically 65 crore as of March 2024. This is a temporary CC credit which we have taken for purchase of commodity raw material in month of March. However, if you see our balance sheet as of December, our net debt was almost, we were cash surplus. In month of Jan to March, we have commodity like chana, potato, etc., where the crop comes once in a year in Q4. And the normal practice is that we do a stocking of all our raw material to take the benefit of prices and even the quality, etc. So we have a borrowing of 65 crore, which was utilized towards purchase of raw material.
Okay. So in working capital, for FY24, I see it has inched up a bit. I think so it's nearly 14-15% as a percentage of revenues. So do you have any outlook on working capital?
So working capital has increased because you can see there has been the decrease in EBITDA to the close of 20-25 crore, and the cash generation from operation has come down to that extent. Otherwise, the investment in inventory is only, which is a temporary one. Otherwise, the working capital remain intact. In our business, we do selling to our dealer on advance basis, and our payment to vendors, etc., is also on immediate payment terms. So whatever working capital we have, it is all towards inventory procurement. And the inventory, as and when this inventory get consumed in subsequent months, the level of inventory come down and working capital level improves.
Okay. So is that the reason, because you have higher proportion of chana in your overall raw material mix, your inventory has actually gone up in FY24? Is that the right understanding?
Yes, you are correct. We had a good amount of procurement in March 24 from chana products.
Okay, fantastic, sir. So my last question, your capacity utilization is still around 35-36%. Still your ROEs are very high at nearly 25-26%. So as your capacity utilization increases to 55-60, can we expect your return ratio also to improve?
Yes, you are very correct. Our ROE, ROC is going to increase because we don't see any capex investment in coming 1 or 2 years. And with the increase in the profitability, this ROC, ROE and asset turnover, etc., will substantially jump.
Fantastic. So my last question on the dividend payout, I think so there's some resolution which is being passed. So have you announced anything around that on the dividend payout, or what are your thoughts on dividend policy?
Yes, we have announced dividend. The outcome is there in the board meeting minutes, which got published. It is 25% of the dividend, 25 paisa on rupee 1 per share.
Okay, and is this the policy now going forward, or this is more you have given at the first year after listing? And
no, it is going to be, so it all depends on the performance, but we intend to have a good amount of dividend distribution also.
Perfect. So thank you very much and wish you all the best.
Thank you.
Thank you. Next question is from the line of Saurabh Jain from HDFC Life Insurance Company Limited. Please proceed.
Hello, good afternoon, Rajbhai and Krishbhai.
Good afternoon, Saurabh.
Good afternoon. So, sir, I just want to understand what was the volume growth for this quarter?
So volume growth, 8% revenue growth. Volume growth has come from various segments. So Wrapper segment, there is a 33% increase in packets sold. In Gatia, there has been 11% increase in the Gatia packets sold. Overall focus market has grown in terms of volume 18%, while core market volume is more or less similar. 10 rupees SKU, there has been 42% increase in the volume in terms of packet.
Okay. So you said that for core state, volume growth is kind of flat, right?
Core market, it end up flat, right? So overall, at core market, it end up flat, right, in terms of volume. 4% is there. So when you are saying about core market, it end up flat, 18% in focus state, and there are a couple of other states where there has been 83% increase in the volume also. This is only because we have entered into new state during the year, and there was no sale in FY23.
Okay. Okay. The reason I'm asking on core state, because you had increased the grammage. So for rupees 5 SKU also, you said that you had increased the grammage from 20 to 25. So when the packets sold are broadly flat, then ideally the volume growth should have been there, right?
So when you say volume growth, in terms of volume, it has grown, but in terms of packet, it is more or less similar. That is what I'm trying to say. Yes, in the core market, we have not grown. There are places where because of competition and unhealthy way of doing business, we have not grown. But if you see our Q4 performance, our revenue in Gatia has grown in terms of volume. Also, close to 11% we have grown in Gatia itself, which is our core market, which is our core product. And in Namkeen also, we have grown by 4%, which is in Q4. But overall, for the year, we have not grown. Quarter on quarter, we have done an improvement. So Q4 is better than Q3 in terms of volume. Year-on-year comparison, Q3 is better than Q2. So if you go and see our Q2 performance versus previous year of Q2, our revenue in core market was down by 9%, which came down to 4% in Q3, and now in Q4 it is 1% versus previous year.
Okay. Okay, understood. So just like on the way forward, the competition that we're seeing in our core state of Gujarat, is it broadly like we have everything in the base now, and now we should see the growth from here on? How do you see that going forward in FY25?
So as you see, quarter on quarter, we are improving. The growth, the degrowth has subdued from 9% to 1%. And definitely, we have now sales team in place. The complete, the ASM, RSM, national sales head, everyone is in place. And we have a target to grow both in core market and focus market by double digits, both in terms of value and volume.
Got it. So I think to an earlier question from one of the colleagues, you said that you're aspired to grow in double digits in core markets and about 20% from other focus states. So this 10% growth from Gujarat state, this will be driven by like market share gain in your existing, can say, geographies within Gujarat, or this will be driven by the distribution expansion that you're doing in south of Gujarat?
So as I said, that 75% of our Gujarat market is penetrated. Wafer is something where we will be targeting big way because it is highly profitable for us. Wafers, as I said, it is 1% of our overall industry market, revenue market in wafers. So we plan to grow bigger and at a larger pace in wafers, while other ethnic market, etc., will continue to support in terms of growth. But majority of the growth will come from wafer product.
Okay. Okay. And on the employee expenses, so this year we ended at about 102 crores. So in terms of like adding people on the, 102 crores on the FY24 levels. So I'm saying that the work that we had done in FY24 in terms of improving our sales and distribution network and like hiring the more senior people at that for expanding distribution, is that broadly done? And how should we look at the employee expenses going forward? That will increase at a like in terms of increments only or?
So in terms of headcount, it is already done. We may optimize in some area where there are excess manpower. But this 102 crore definitely will have incremental impact, the annual increment which is given to our employee in FY25, not in terms of headcount, but the inflationary impact which is normally there for every organization.
Got it. So this increase from here on only will be annual increment. There won't be any significant increase in your.
And we also plan to optimize on headcount wherever there are excess manpower.
Okay. Okay. And sir, on the A&P side, you said that target is to increase it to about 2% of sales in FY25. So that will be like more back-ended in Q3, Q4, because I think Q3 is festive, and that is so, or it will be like uniform entirely across the 4 quarters?
We have plan in place. Maybe in Q2, couple of campaign, etc., will come on air. Then Q3 also. So we are working on strategy, the line of communication to the customers, and the various mode of communication, etc. Mostly it will be uniform across months, but during festive season, you may see some spike in advertisement cost.
Okay. And in terms of other operating income, which was about 8 crores in Q4, so you said that this will be at a run rate of over 10 crores for like each year going forward. Is that
Yes, correct. So we have invested capex in both our Nagpur and Modasa facility, and there are a couple of subsidy where we are entitled to enjoy, and this will be in the range of 10 to 12% 12 crore going forward for next 4-5 years.
Okay, for next 4-5 years. And sir, last question on the dividend. So basically, you made a EPS about 8 rupees in FY24, but the dividend distribution was just 25 paise. So how should we look at it going forward? It will increase or how should we look at it?
So we don't want to comment right now, but we have intention to have a good amount of distribution of dividend to our shareholders.
Okay, sir. Thanks a lot, sir. Thank you. And best of luck.
Thank you.
Thank you. Next question is from the line of Binay Shukla from Phillip Capital. Please proceed.
Hey, hi, sir. My question is on paper side. Since you mentioned that your 4% gross margin is higher than the other category and your current mix is around 8%. So what should we look at in next 2 to 3 years in terms of mix in the total sales? Second question is what is your urban versus rural mix? And the third question is mainly on your focus market, since you mentioned that you wanted to grow in double digit in terms of value and volume. So is it mainly driven by the distribution expansion or what will drive the growth in this focus market? And because since you're 46% of total distribution network in focus market.
Yeah, so I'll come one by one. So on the wafer market, last year we have grown by close to 40% wafer product, and we continue to grow at the similar pace. While other product like Gatia and Namkeen will be in the range of 10 to 12% growth. So you can understand this 8% of overall revenue, the mix will change to 12-13%, and going forward it is going to increase substantially. Your second question was more on the focus market strategy. So focus market strategy will have two factors. One is increasing the distributor network. As I said, in last 100 days, we have added 80 dealers in focus state, and will continue to increase the distributor network because our facility is located at the center of the India, which is at Nagpur, and almost less than 20% utilized. So we'll capitalize and leverage that by increasing the distribution across Maharashtra, MP, Rajasthan, and UP as well. So that is one, and also we are focusing big way in modern outlet, e-commerce, etc. In the urban segment, where the growth will come. come there, from there also. So we are planning to grow focus market by more than 20% in FY25. Any other? You had one more. Yeah.
Yeah. What is the mix of urban versus rural?
Rural is currently 75% of our. So it is based on the population, what tier 1, tier 2, and tier 3. Tier 1 is 20 to 25% of our sale. 75% comes from tier 2 and tier 3 market currently.
Okay. So who are your biggest competitors in your focus market? Because you mentioned that distribution expansion is how is it easy to expand this market given the competition? So who are your biggest competitors in these focus markets? Any sense?
So there are multiple competitors in multiple areas. For an example, in Rajasthan, there are Bikaji, Balaji. In MP, there are Yellow Diamond, Akash, and Balaji, somewhat Haldiram. And in Maharashtra, it's Haldiram and Balaji. Where we move towards east, there are Prabhuji and other brands. So there are players which are strong in some part of the area, and different part of the area there will be a different competitors, and they have different strength in different products.
So while there are players who have dominance in different states, but we have a product mix, 87 product, and then close to 250 plus SKUs, which caters to the taste and preferences of each customer type at various states. So we have an easy entry into various markets because we have 5 rupees SKU, and then the product like namkeen, wafers, etc., which is our hero product and which help us in entry in any market.
Okay. And last question in your product launches. So you mentioned that you have launched 3 products. So what is your game plan to introduce more launches going forward, and what would be the current mix of new launches over total sales?
So at present we have 87 products, which I said ranging close to 320 plus SKU, which caters to the different taste and preferences of the customers of different states. We'll also continue to launch new product according to the taste and preference of the customer in regional part based on the demand coming from the market. We have recently launched new product, as I said in our presentation. Kolhapur Badang is a regional Maharashtra product, Sabudana Chiuda, then there is a Cornigo ring. So we, based on the demand from the market, etc., we continue to innovate and work on new product thing. But given the healthy product mix of 87 product divided equally into various segments like ethnic and western and other products, we wanted to expand the existing product portfolio first and focus only on the demanded product, where we get a requirement from the market, and we will definitely look forward to launch the new product also. So there is no as such plan that we'll continue to launch new product. It is the demand which will drive the launch of new product.
Got it. So what will be the percentage mix of new launches over total sales? Is it
So new launches we have done in last 3-4 months only. During FY24, there were only 3 products which we have launched. Earlier, 2 years back, we launched 2 to 3 years back, we launched Pistos. Even there was noodle product which we launched 2 years back. So it is only basis the demand we launch. We have a sizable force. If we have to just summarize, the last 3 to 4 years, the new product launch is contributing to close to 7 to 8% of our revenue.
Got it, sir. Thank you so much.
Thank you.
Yeah.
Next question is from the line of Kiran Paranjape, an individual investor. Please go ahead.
Hello. I just have one question. This was regarding the promoter holding. If I see as of now, it is 81.48%. Just wanted to understand what's the timeline as per SEBI to bring it down to 75%? And what's the plan from the management for that?
As per the SEBI requirement, we have 3 years to bring down this promoter holding to 75%. we got listed only in month of March. We will grow. Our focus is to grow in terms of our revenue, profitability, etc. Definitely at the right time, we will plan to dilute our holding.
Okay. Thanks for that. That's all my question.
Thank you. As there are no further questions from the participant, I would now like to hand the conference over to Mr. Raj Hadwani for closing comments.
So I'll take this. So thanks everyone for joining. It was a great interacting session. If any question which is left out or unresponded, please reach out to Stellar or directly to us. We are happy to respond to any queries coming forward. Thank you. Thanks everyone.
Thank you very much.
Thanks. Thank you.
On behalf of Gopal Snacks Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.